Good afternoon, participants. I'm looking at the clock on my computer and it's 3:01. So we're going to go ahead and get started today with our regular Thursday afternoon Innovative Business Advisors webinar. And we have a very interesting speaker with us today, but let me go through the logistics for the webinar first. For anyone who is joining for the first time, we're using the Zoom portal. In this webinar, you'll see at the bottom of your screen a Q&A icon. During the webinar, I encourage you to type in any questions that you have related to the webinar. We'll get started shortly, and Steve will give a brief update, very, very brief update, because not much happened this week. And then we'll move into a Q&A period, a bit of an interview where Terry Lammers will interview Steve Applebaum with Arnold Insurance. And the subject today is all things insurance that may affect you and your business. So with that said, Steve, I'm going to let you take it away first.
Marquita, thank you very much. We appreciate your moderating these for us every Thursday. And again, we're very appreciative of all that you do with Innovative. So not much to report this week. As everybody's well aware, Congress is going back and forth on a phase 4 program. There doesn't seem to be too much progress happening. As a matter of fact, just ahead of this call, it looked like that the Senate may be adjourning for the summer. And we'll see where all that goes. Banks have begun to provide some instructions on the forgiveness application process, and that information is coming from the SBA. So again, we're expecting those portals to begin to open up next week and people to begin to be able to apply for forgiveness. But other than that, no other updates to report this week. Those that got up early this morning and saw that unemployment ticked down, that was a good sign. So first time in a couple of weeks that the jobless claims for unemployment have ticked down to 1.2 million. So starting to see some green shoots in the economy, and all the economists that you read about in the paper and that are interviewed on TV are talking about, we are probably going to have a strong bounce back in the next quarter if this pandemic doesn't get any worse than it is right now. So say your prayers and let's hope for a strong bounce back. With that, I'm finished. Terry, I'll turn it over to you.
All right. Thanks, Steve. We've got two Steves on today. Steve, great to have you on the webinar. I know you're a second generation insurance guy. I was on a conference yesterday all day long to get my CVA renewed, and at the end of the day, another lady from St. Louis had quite a long conversation about insurance and the COVID things, business interruption, things like that. So tell us a little bit about you and your company, and then let's jump into talking about insurance.
Sounds great. Thanks for having me first, Terry. It's always a pleasure helping you and your friends over at Innovative. Marquita, it was wonderful to meet you today. I'm second generation in the insurance business. My father started in the property and casualty business in 1973, and I grew up in the business, and the thing that always drew me to this business were the relationships that Dad talked about, and an ability to forge ahead and be in control of building a business that didn't require large buildings and a ton of infrastructure. So today that's more important than ever. We can build and expand out with small offices all over the country and expand out our production footprint. And we have enjoyed that. We now have offices in Phoenix and 2 in Tennessee, and I run the St. Louis office, and then we have 4 or 5 other offices around southern Missouri, and it's been a great road, and I enjoy it a lot. And my family business joined with the Arnolds, who are Arnold Insurance, and we officially joined in 2019. We've been working together since around 2015. So again, it's been a good road. Of course, none of us really saw COVID happening, so we are just as much a small business as you all are here on this today. We've got 53 employees, so you can imagine we feel the weight of keeping families with groceries in their cupboards, and being able to be present in our communities and being able to help where others may have a greater need than even ourselves. And so it's really been an interesting 2020, and I might say that I'm excited for 2021.
Get this over with sooner or later, right?
Yeah.
So you and I have talked about this once before, and a lot of angst, and I'm sure you've got fielded a lot of not so pleasant phone calls, people having been business interruption insurance, and it's really been kind of a mixed bag whether it applied or didn't apply. And for most part, I'm understanding that it didn't apply, right? So can you kind of enlighten us on that a little bit?
Sure. And I'm an insurance agent and I don't want to get sued, so I always have to throw this caveat out there. You know, none of this could all be different with your own policy. You know, review it, have your attorneys look at it, and or your insurance expert. But for the most part, the property coverages didn't respond to this pandemic. And business interruption primarily is a property coverage. Now, you can have business interruption on other policies, but for what most people think of, Main Street USA, or for a manufacturing facility, or a retail outlet, something like that, a restaurant, of course, their premises located and their business interruption primarily is found under the property policy. So depending upon the size and the complexity of your business, you may buy a specific business interruption limit. You may say, I'd like to buy 18 months worth of ongoing operating costs or something like that. And you and your accountant and or your insurance advisor, an attorney maybe, will work. I work with clients with worksheets and things like that, and I'll help them determine, you know, really what is their true exposure, what needs to be covered, what doesn't need to be covered, things like that. Other ways to buy business interruption insurance, especially in risks that look a lot alike. If you have 15 shoe stores, they're all going to kind of look alike, and we can buy coverage, or you can secure coverage based upon a limit referred to as actual loss sustained. And so for the most part, that will step in and pay ongoing business expenses, including payrolls in most instances, and it'll cover benefits, it'll cover ongoing insurance payments, things like that, your rent, your mortgages, your utilities, and you would buy that, say, for 12 months. And so if you had 10 months into your policy period and you had a loss, you'd have another 12 months after that, so from the time of loss. Sometimes people will expand that out and by 18 months or even 24 months. It would really depend upon what your ability to start your business again and would look like. And I would encourage everybody that you should at some point be working with a professional, whether that's your agent. We work with clients like this to try to help them come up with a disaster recovery plan. There's a lot of tools out there. The SBA provides tools out there.
What was I forget the exact word of it, but it had something to do with the civil authority shutting things down, because part of what they was talking about yesterday is, you know, some of the issue was, well, they recommended that you close your business. You didn't have to close your business. So.
Sure. So in that line of coverage, for a property coverage to trigger, you have to have direct physical loss. And so let's look exactly what you said, Terry, and say, did we have any direct physical loss to our manufacturing facility, to our restaurant? We didn't. There was no loss there. So we can't trigger the coverage. Now, I know that makes a lot of people angry, and this will be hashed out in court. Don't take my opinion. It's going to get hashed out over the next 5 or 7 years. But the reason that coverages didn't trigger is because people not walking into your restaurant because they're scared is nowhere covered under a policy. And the civil authority part that you mentioned, Terry, really has to do with the way it's designed. Now, it will be different going forward, but the way it's designed is if there was some sort of a loss near your property and the civil authority said you can't have access to your property or you need to close, there's been some sort of maybe an environmental problem or something like that, or an access, a bridge, something like that, or was unsafe, you couldn't go in, you could trigger coverage. But even those coverages are limited. They're generally anywhere from 3 weeks to maybe 2 to 5 months, 6 months for civil authority. Again, but it's all going to go back to being triggered by a direct physical loss. So nowhere in the insurance world that I was aware of and am aware of was there true pandemic coverage that was readily available and being sold. We can all run to say that there was probably a Lloyd's of London market and they're great and we use them for things when we have to. There could have been. But in terms of was it generally accessible and readily priced in the market for your average insured to purchase in the market, the answer was no. It really wasn't out there.
So what do you think about, so if the rulings of the lawsuits would go that the insurance companies did have to pay, there was some question yesterday on webinar about what's the solvency look like of these insurance companies? Will they survive it?
If you think you know disruption today, I would suggest that you don't know disruption today. If the insurance companies are forced to pay for risk that was never priced into the model, it will cause insolvency issues on a widespread basis. I was looking at some, and I can push some of this back out to you, Terry. We talked about being able to produce some of these reports out to everybody on the webinar, but I believe that the estimate is that if the insurance industry was to have to pay business interruption, it would pay somewhere in the neighborhood of $150 to $225 billion a month for lost business interruption, which would deplete the reserves of the entire property and casualty industry for probably in about 6 to 8 months, because that reserve sits there waiting to pay for other things that have been priced into the market. There are going to be fires. We have tropical storms right now in the United States. These things are priced in. They're part of the risk, and they're expected to pay out. If you all of a sudden have to pay out things that were never priced into your market, it would cause quite a bit of disruption.
Amen. So what other COVID issues did you see? What about employees suing their employer for non-safe working conditions or anything like that? And before you answer that, I just want to throw out to our attendees, if you have any questions, by all means, please enter them into the Q&A section, and we'll answer them as we go. So go ahead, Steve.
Yep. Thanks, Terry. You're actually talking about a really hot topic right now. So it is coming. It is being, when I call it trolled, turn on your local television and watch the local attorneys buying as many 30-second ad spots as they can get. There are certain areas where I think that, that COVID is being determined as what's called compensable, meaning that it became a workforce issue, and certainly healthcare, first responders of any sort, even retail, grocery store, things like that, where you didn't have a choice but to be around a lot of these people. It's being assumed that if you were sick, it can be, it doesn't mean it will be, but it can be compensable under workers' compensation. So when we talk about things like that, it could cause some disruption in that market. But the work comp market's been pretty healthy, so I'm less fearful of what it means in that world than I am in the rest of the world. But yes, it's there. The other side of it is suing your employer for an unsafe working environment. That can happen. That would trigger different coverages. I think that the real tidal wave of that has yet to come. Do I think it's going to happen, this year, still yet this year? We'll see, but I think there's going to be people trying that market. Why? Because they're going to look for a bag of money, and insurance companies have bags of money, and whether they're successful or not is a different story. But to the medium and small size business, I'm sure that everybody on this webinar can relate to the fact that regulations and guidelines, whether it was from OSHA or CDC or your state and your local municipalities, county governments, they were changing daily. It's been real hard to keep up with. We have advised our clients mostly to run with OSHA and CDC stuff, but it's been real difficult. And certainly masks and PPE and all of those things, regular cleaning, making sure that you as the employer are documenting your efforts will always help you show that you didn't just throw caution to the wind and then tell your insureds, or excuse me, your employees that they needed to work in an unsafe environment. You needed to at least be able to produce some sort of a plan, if you will. And those plans are readily available. I mean, CDC.gov's got everything in the world you need right out there.
I don't know if you remember, Gilster Mary Lee is a very large baking company in Chester, Illinois. And in the early beginnings of this whole COVID thing, there was a group of people, they traced it back to a restaurant. And, but then one of those people were inside the office and it ended up killing the CEO, or, the CEO, not killing, it's probably a bad word, but, the CEO of the company ended up dying from COVID. So it was crazy.
Oh.
And their whole office got it.
Yeah.
That's just, mine is like, ugh.
Yeah.
So
there's not a lot, you don't have to go very far to read bad stories. And this is as hard for businesses to manage, and we're part of it as well. As I said, 53 employees, we've been affected just like everybody else. And it's not a lot of fun. It's not a lot of fun.
So with everybody at home and on computers and Zooming and stuff like that, has that changed anything with cybersecurity insurance or what's going on in that market?
Yeah, that's a great point. So it's a double-edged sword for me as an agent. Clients that I have been working with to say, we have this exposure, what are we doing? Are we sure that we have our systems locked down, and are we making sure that we're regularly auditing and that our files are secure, if you will? It became important really, really, really fast. So there was a lot of catch-up. That learning curve got really steep because a lot of times small businesses are focused on the latest fire and making money or exploiting a new market that they have or a great new customer, and those are all really important things. These sorts of issues take a back seat, but this really got thrown into the forefront. What specifically you asked, Terry, is has it changed the market? Yes, pricing has moved. So pricing has gone up to expect the fact that even though people ran out, and a lot of people ran out and tried to at least get something in place, I am seeing pricing pressure going up. But what I'm also seeing, which is the greatest thing about cyber security insurance, things like this, data breach, things like that, is the services that they are willing to provide you as a small business. I have a really cool tool through Keystone Risk Management that I can use that's interactive and can say, how many records do you have? We have all of these fields that are fillable and they're interactive with you, and we can talk about what would a breach look like. And in particular, that'll give you an idea of how to quantify what is my real risk. Is my risk 50 grand or is my risk 5 million in terms of how would I be injured by this? Because you are going to be responsible for all of the credit monitoring and all of the notification and all of those things that can come with it. Plus, you could be liable for the economic injury that you do to somebody else as well. So depending upon what a particular loss looked like, you could really get on the hook pretty quickly. So let's say that you as a business owner or as a senior executive of a business have decided, yeah, we need to button this up. When you engage a carrier, they actually will bring in a ton of tools for you that allow you to work with your own IT department. And let's face it, not every small business has full-time IT. Sometimes you have it outsourced to somebody else, right? So there's a lot of resources that can be interactive, and it's not saying that your current relationship wasn't doing it properly. It's saying, hey, let us help you. Let us show you what's going on. In particular, one of the things that I like is that with this one particular product, that's and it's backed by Great American, just in all transparency, and so huge company. It it will give you a scorecard, and it's a dynamic scorecard. So as you fix things, Terry, your score can go up and down. You can go from a C to a B to an A, and then it can provide you back not only specific experience for you and your risk, but really in your SIC code. So you can really say, if I'm a property developer, how do I score against other property developers? Because you're probably doing some of the same activities. And this particular scorecard is something that's new. I did not have that scorecard in May. I had that product, but it's becoming more interactive. And so that's a long answer, and I'm sorry, but how has the market reacted? I think it's gotten better. Does that make sense?
This is maybe a little bit of a different question, but have you ever seen, an issue like cybersecurity come up in a sale of a company? Are they inheriting clean information, in other words?
That's
That
a
would be a
great
non-question.
question. Right. And I believe, so let me see if I can answer this properly. No is the first answer. I haven't seen it come up. Do I think it will come up? Yes. So I'm going to say, I think it was a year and a half ago at one of my CIC continuing education, right? Terry, you and I were joking about some of that continuing education that we have to do, but they were talking about how do businesses transition and how do you make sure that there's a clear cut in the liability chain from the old to the new and things like this. And a lot of it had to do with financial, but I'm telling you, 18 months ago, they didn't cover data. They didn't cover your operations like that. I think if you engage proper financial advisors, whether that be through a CPA firm, what you guys do, Terry, and you have tons of resources for people, I think that that's going to be something that grows. That area exactly will be growing.
Interesting. So let's switch gears again a little bit. What's going on in the health insurance world? What kind of trends do you see there?
What I'm seeing there, for the most part, is people really trying to take more control.
And rates and, probably be half before.
I wish that I could have my crystal ball with rates. You're still going to be based upon your usage. When I say people are trying to take more control, they're being more creative in how we design plans. So we can do high deductibles, but then we can do some stuff between your first dollar and where your deductible expires. HSAs obviously are very popular, and things like that. But we're also seeing that in the smaller market, let's say under 50, because of all of the tools that we can bring with computers these days, we can manage and we can go to almost a not a fully, but almost a self-insured health insurance. So we can manage some of those benefits and kind of have buckets of deductibles and things that are out there that allow us to be more proactive and find a better carrier. And we can make sure that depending upon the size, we might find out that the person that is, or the company that's providing the prescription drugs benefit does or doesn't have good contracts with the most prominent prescription providers to your own employees. If all of your employees are getting the prescriptions at Walgreens, we should make sure that what we have is a really good prescription provider at Walgreens, if that makes sense. And we didn't have that data, 5 years ago. So I'm seeing that plans are becoming more custom that way. And then I'm seeing the second part of it is I'm seeing that people are trying to take that function, and again, in smaller business, it's going to fall to the person that handles HR. And do you have a full-time HR person? A lot of times that HR person might also be the chief financial officer or the chief operation officer. And so he or she doesn't want to be taken off task for a lot of the mundane questions. And so we're able to go in and create some portal type stuff, some online, where we can keep all your benefits in a place where your employees can go in and log in and look at stuff like that. That's really becoming commonplace now, and it's really what you have to do to be competitive, just so that people aren't knocking on your doors and asking for stuff like that. But from a pricing standpoint, I've had some good renewals this year. My fall renewals are looking good right now, meaning from a pricing standpoint. I'm seeing some reduction. If you're willing to give up a little bit more in deductible, you can get some healthy reduction.
Well, that's good news. So you and I had a conversation once. We'll kind of keep changing gears here, talking about trucking companies. So I know you guys kind of have a specialty in trucking companies. That's kind of interesting.
Yeah, we do have a couple of transportation specialists that really do well. Very fortunate to have really done well for a client earlier this year, and just in the second quarter of 2020, we've been working on for a while. And what we try to do is, there's so much regulation in trucking. There's so much regulation that it's just as important of the pricing, and the pricing is extremely important, is the service that goes along with it. Some of the things that have changed with, there's a new clearinghouse that was set up effective January 4th or 5th, I believe. What they're trying to do is create a database for commercial driver's licenses. And the only way we can do that is a manual process. Believe it or not, the states don't talk to each other. So when you hire a commercial driver, a CDL driver, you have to go through a process of contacting the old employer and getting their driving records, loss records, things like that, and tracing that back, and then it has to be uploaded into a database. I think the goal is 2023. This will now, the small business person will have created the database, and it will then sit, and you'll be able to access it like any other national DMV. When you think about it, and you're looking for your driving record, you're dealing with the state of Missouri, the state of Illinois, the state of Tennessee, something like that. This will be a national database. And there's a lot of compliance that goes with that.
I thought that was the whole point of everybody getting a CDL, the commercial driver's license, that it was all tied together. They still haven't done that?
No, that's what we're doing right now. So there's hefty fines and penalties if you're not found to be in compliance with that. And again, the way that a lot of this gets written is those regulations and those tasks get pushed back down onto the small business. So what do you think sprouted up is fantastic third-party companies that really are really good at that, and they may be able to do it for so many dollars a driver per head or per month or something like that, and they'll manage that process for you. And again, from a risk transfer standpoint, that's pretty good, because now you've brought in another party that says, no, this is who handles that for me, and they get all my drivers and they do all the clearing and they keep all the drug cards and things like that. It's specific to COVID. There have been some extensions, so you have to have your medical card and things like this, and it has to be renewed. So during the specific COVID, there have been times where they've suspended the requirement of having that medical card renewed. So thankfully, DOT has been a little bit lenient on that, Terry, but that it's not going to last forever. So
no, it's either I'm up and down the interstate all the time. For a while, it wasn't even pulling anybody over, but they're, at least on the Illinois side, they're back out in force right now. Hey, we did have a question.
Oh, they're out there.
Yeah. How can a family business utilize insurance products to help during a generational transition? Are there specific things that business owners should focus on to reduce their insurable risk and their insurance costs?
Let me see if I'm understanding the question right. So we've got a business, and I'm asking you, Terry. So we've got a business that is looking to transition generationally. There's strategies you can employ with life insurance to try to help fund that. If that's the issue, is that what's being asked, or is there?
No, I didn't. Maybe the person could ask.
Let me use.
I guess a generational transition. You're going from one that may involve, key man life insurance policies, stuff like that, or building cash value. You know, one of the problems that we see all the time is that a business owner will identify somebody, a key man or a sibling that they want to buy the company, but they never set up the funding mechanism for them to buy the company. You know, and it's not just, you know, the issue. I got a valuation that I'm going to be starting here shortly, and the value of the company is one thing, but how do you get, you know, this is a company with large accounts receivables and large working capital needs. So funding the purchase of the company is one thing, but how do you, you know, get them to fund that working capital requirement? So hey, do you do a lot of that with key man life insurance policies, or
it is definitely a specialty. I have people on my team that really dig in deep on that. So yes, we do have the experience. That if it makes sense, the second part of this can be, if it's really a closely held transaction, Terry, there can be ways that, and it's really more of a tax and an accountant situation where you may transfer the operations and buy the operations of the business and not the real estate. Or you can do where you have some hybrid of that and you begin to buy the equipment with it and things like this. But that really is just more of a crawl before you walk attempt. I think on that particular question, I would say that other than using life insurance to build cash value, that maybe, but that's a long-term solution, Terry. You can't just all of a sudden run out and create all of that, because if you had the cash by the side to do that in 2 or 3 years, you'd already be handling it in a different fashion. So sometimes I've seen, and I have been involved with multiple transactions among generations where the buildings, any of the real estate did not transition for a minimum of 5 years. And it helps stabilize all of the banking stuff, all of the ratios you talk about, things like that. And it also provides the surviving, the people who are selling, mom and dad, if you will, in that instance, or maybe it's 2 partners, it allows them to take some income back out, maybe at a lesser tax advantage strategy, and then 5 years from now they can get back out of it. Yeah. And the banks would be okay with that as well. I've seen that happen multiple times.
So I guess, you know, this was really a 2-part question. So second piece of it is, are there specific things that business owners should focus on to reduce their insurable risk and their insurance costs? And I think that's in general, not just, you know, what you is like, my, you know, my property, you know, what, you know, I've had plenty of insurance adjusters walking around inspecting these before, but, you know, is there something specific, you know, or specific things to think about?
Yeah. So where I tend to dig in with my clients, I was with a client at 10 o'clock today, and one of the things that we were doing was, your agent should be bringing in a lot of carrier resources. The insurance carriers themselves want to help you with a lot of stuff. They'll give you a lot of help in different scenarios. Where I would definitely suggest all of us on this webinar, we're signing contracts today willy-nilly, and we don't really realize what we're doing. I would say contractual risk transfer is definitely a hotbed. So be careful those pieces of paper that you're signing with, especially in contracting risks and things like that. But your vendor agreements, I can't tell you how many times I'm told, well, that's okay, my vendor handles that. And I'm like, no, they're really, it's still going to come back to you. So, you know, making sure that those agreements are reviewed either by, ultimately by house counsel or whoever it is that you're using for legal. But we do quite a bit of that. We are not attorneys, but we've seen a lot of contracts. Look at the leases that you're signing. I can tell you time and again, a common problem that tenants get into, and they say, well, I signed a lease, you're in charge of everything else. And they don't realize that they're in charge of the, and I say in charge, they're responsible for the $100,000 HVAC system on the roof. Does that ring a bell with you guys? You guys own some property, Terry. Depending upon what your lease says, you know, you may need to ensure that. When I say you, meaning the tenant, it's not expensive to insure part of the building. We just have to know that we're supposed to do that. I would suggest that it's more the cost of the uncovered claim is what can get you put out of business than the $900 worth of property coverage that it would cost to insure, you know, $50,000 worth of building coverage.
Yeah.
So again, it's in those details, Terry, that I think when I say, or the question I think was, how do I lower that? You've got to engage in that.
I had about an $80,000 education on details with an insurance, but
well, I'm sorry.
Yeah, don't.
But you know,
it is crazy when it happens because, you know, like I think it was about 3 years ago, I had a building get struck by lightning, and thank God it happened at 2 o'clock in the afternoon, because if it would have happened at 2 o'clock at night, it would have burnt down. Fire department did a great job getting in there, and it didn't take a lot of water. It was a medical facility, so there wasn't a lot of carpeting and stuff. And I was in the building the next day, and I'm like, looks good. We'll be back in this thing by the end of the week. Holy cow, it was 3 months. I mean, you know, the smoke damage is just crazy. So, and then storing all the, I mean, you had to come up plate, you know, their stuff wasn't damaged, but you had to get everything out of there. So because the walls had to be painted and carpeting had to be done, you know, and it was the insulation had to be replaced. It gets a little crazy whenever you get into it.
Yeah, and you know, you bring up an interesting point. You could, in that particular scenario that you were talking about, you could end up having to pay quite a bit of expediting expenses, just getting things moved around and things like that. That's really going to fall more under your business interruption type of coverages.
Yeah, so that's interesting. You know, kind of. So you talked about, you know, you guys kind of got a little bit of a specialty with the trucking industry. I guess maybe a two-part question is, one, what other industries, you know, are you kind of like specific with? And two, does it make sense, if you're going to talk about details in an insurance policy, does it make sense to work with an insurance agent that specifically deals with your industry?
It's a great question. I think it's important that you know that the woman or man that you're working with has a working knowledge of risks that look like you. So yes, I write quite a bit of large property as well. Anything from strip mall to office buildings, things like that. You know, again, one of the first things they're going to ask for is, what's your standard lease look like? You know, things like that. But it's important that you have an agent that is not afraid to get into the weeds with you. When I work with clients, whether they're my existing clients or prospects, and they say, well, my other firm never asked me those questions. And I said, I'm not going to judge that. It's really up to me. I have a process that we go in and we try to look at these certain areas that are common stumbling blocks. And so we're going to look to those agreements and make sure that we agree that they're in the right spot and they're doing the right things. And then it's one thing, let's just say you have a fantastic, and you're a contractor. Let's just say you've got a great contractor-subcontractor risk transfer agreement. Well, in principle, that's great, but if you're never using them, and I can tell you, there's a lot of people that don't. They say they use them, and they're like, I've been working with that company for 7 years. We've never had a problem on an invoice. They didn't sign the contract. That's the one that's going to go bad.
Right, Jim. Yeah, it's funny. You're starting to bring up all these wonderful memories I have of insurance. Do you use, we do this now with all my commercial buildings because I got burnt on it, the detailing in, like a checklist, you know, what I had happen is I have a commercial building with a lower level, and it's all offices and all carpeting. Well, the sewer backed up, flooded the basement, or, you know, flooded the lower level. Yeah. And I called the insurance guy, and he's like, oh, you don't have that coverage. I'm like, what? You know, that was a several $1,000s deal. And, you know, insult to injury, it would have He told me that I didn't want it. Well, naturally, I never remember that question being asked. And when I switched insurance companies, that coverage literally cost like $50. So,
Right.
so
Yeah.
you know, but what this new company did is they got a series of things that you got to check off. So they keep it, you know, in the file, you know, where you specifically ask, do you want this? You know, where you specifically ask that you want earthquake coverage. So I don't know, it just seems like a logical thing to kind of cover your tail.
We absolutely engage in checklists. We, on our insurance proposals, whether they're renewal or new business, we initial with our insureds every single page. That way we know we covered every single page of the proposal. And that really is out of necessity because risk is getting more and more difficult to keep our hands around. Small businesses are great. They react quickly. They do things and they don't think to call me or Susie down the street who is their insurance agent. And I get it. You don't want to talk about insurance. You want to talk about this great opportunity. But sooner or later, that information has to make it back. As one of my clients says all the time, and I love him for saying this, Steve can't insure what we don't tell him about. Now, I wish I could take that and blast it out to everybody, but it's true. I'm not who you want to talk to on a regular basis, but I guarantee you, on your worst day, I'm the second person you call. You call your spouse or your loved one and say, I'm okay, and then you call me. And it's a heavy weight, and I take it pretty seriously. And if you say, hey, you remember that place in Chester, Illinois? And I'm like, we don't have a location in Illinois, and you never told me, and you can't produce an email, you can't produce a text message. How am I supposed to insure what I don't know? And yet, I want you covered as well. So
I'm literally laughing because
I would certainly say
I feel like I'm getting PTSD here or something because all these old memories are coming up. I had a box truck going down the interstate that had a 250-gallon oil tote on it, and there was a cap over, you know, it's got a 2-inch opening at the bottom, and some empty drums were bouncing around, hit the ears of the cap and knocked the cap off, and the valve wasn't closed. So we oiled about a 10-mile section of Interstate 255 and part of the downtown Wood River. And you're right, the second phone call I made, the first one wasn't to my spouse about this, but the second one that I made was to the insurance company. It's like, do we have coverage for this? So.
Did you have a pollution policy?
Yes, we did. But so that was actually, we got by easy on that one. I don't think we turned that into the insurance company. But with the $80,000 education came from, we had a pollution policy that covered if we had a spill, but it did not cover drips and leaks over a period of time. So right. I was liable for the cleanup.
So, what they call it, sudden and accidental versus, does that term bring back memories, sudden and accidental?
I just remember it was in like paragraph 3 sub something, and right. You know, they recorded you when you told them what it was. So anyway, kind of crazy.
Well, you know, again, those risk transfer agreements, the leases that you're signing, and for all of us here on the webinar, if you're wondering, one of the questions I like to ask clients, because it's insightful, is I ask them, what keeps you up at night? Sometimes it's financial related. Sometimes it might be that they're thinking on transitioning the business. All right, well, that can open up a conversation. It may be, you know, we're trying to onboard this new client or something like that. And then I like to share with them a couple of things that keep me up at night. And some things that keep me up at night are cyber. We've talked about that. One of the big ones that I would encourage all of you on this webinar to look at, if you have buildings that are greater than 25 years old and, you know, they're of value, you should be looking into 2 things. Not only your debris removal limit and how will that respond, but this little known coverage, and it's only little known until you've got a claim, and it's called ordinance or law. And this is not to be geeky. This is to say it is a real pickle of a coverage. And what that means is that your local ordinance may say, if you have a 10,000 square foot building, it may say that if 30% of your building is damaged, any reason, fire, water, sewer backup, blah, 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 you have to tear the building down and rebuild. It's the ordinances, the municipalities, and I'm not telling you that everybody does it this way. What I'm saying is there will be an ordinance in your local municipality that is a threshold. And so when you go to your insurance policy and they say, okay, well, we've got 30% of the building damaged, we'll pay to fix that. Well, they told me I had to tear down the other 70%. Where's my limit for that?
Yeah.
And for anybody that's in any sort of a historic, here in St. Louis, it's always these municipalities, Webster Groves and Kirkwood, things like that, University City, where we've got some older buildings, things like this. It's really important that you know what that limit is and how would it respond. That is one that will get you stung. The second part is they may not say you have to tear it down, but what they will likely say is you now have to bring that up to current code. Now you got to rip out all your bathrooms. You've got to change your electrical spacings.
Put a sprinkler system in.
Sprinkler system in. There you go, Terry. That's referred to as increased cost of construction. So again, guys, you know, having somebody, you know, you learn in this business through the school of hard knocks, and
yeah.
those are real things that we can all look at.
So we're getting close to
our business now.
Yeah, we got about 10 minutes left. But another thing that's been going through my mind is, you know I had to give my insurance company financial statements all the time. So if a company takes a hit, you know, because of COVID, and I've seen it with, you know, it hasn't affected everybody, but there's a lot of companies that first half of the year are going to look pretty disastrous. Can you talk a little bit about what if a company's financial statements do look terrible? What's that going to do to a renewal or something like that?
Great question, and I ran into this on Monday, but the first and foremost thing I'm going to say is you need to be working with guys like Terry Lammers that can give you a great story as to why you need to understand it. That's a shameless plug, but if you don't understand why your financials look bad or have taken a hit, then that's the worst to have. You just have to understand to be able to explain that. I had that very scenario happen on a renewal. So let's talk very, very quickly. When you're commonly asked for financials are going to be on your professional lines. Professional liabilities, they're not going to generally ask that for a commercial auto policy. They generally aren't asked for. It depends upon the size of your business, but certainly pollution liability, they want to know about it. Employment practices, directors and officers, things like this. Your financials are going to be asked for. So you need to come into that with your best offense. If you're already on defense, then let's write up a narrative. All of my interactions when I present a risk to a carrier, I do my own write-up, much like you do with your evaluations, Terry, and I give them a write-up and say, this is what's going on, this is the state, maybe this is what 3 years of revenue looks like, this is what employee count looks like. And do you think that the insurance carriers don't know what's going on? We just have to tell them why the financials look the way they do. And in one particular situation just this week, I ended up $75 less than my renewal for that client. And I mean, so they were right on the number. And the current carrier had refused to offer a renewal. So it ended up being a real bonus that we were able to spin the financial situation in a way back in, I'll just be honest, it was Philadelphia Insurance Company, and they bought in on it. And they said, hey, this makes a lot of sense, because what the insured was going to be faced with was doubling their premium if we had to take the only offer out there. And at the 11th hour, we were able to convince Philadelphia to see it our way. And that came through the help of the chief operating officer and some really good explanations. So I wouldn't be afraid of that, Terry. I really wouldn't. I would say be proactive on it.
Well, such great advice. So if anybody's got any last minute questions, that's great. Shoot them off yet. We got a little bit of time, but Steve's contact information's on on the screen there. I know he'd always entertain talking to anybody and everybody. And since you give us such a nice plug, I'll give a plug for the CEO program. Steve, if you want to put that slide up. That's, one of the main things that we do in that program is to make sure that your financial statements are, one, readable and relevant. And the regular CEO program is set up as a 20-session course, 12 months back to back, and then 2 years quarterly. And then we also have the Business Profit Improvement Plan, which is a 4-session course that's online. So a lot more detail in the CEO program. You will come out of the CEO program or the Business Profit Improvement Plan with a firm understanding of what your financial statement and some key financial ratios. And more importantly, or as important, is your bankability. Are you a bankable person, and what makes you a bankable, what's your debt service coverage ratio, things like that. So, well, hey, it's been great having you on. Steve or Marquita, you got any final comments, or I'll turn it back over to Marquita.
Okay. Well, Steve Applebaum, thank you so much. Very informative webinar. And Terry, thank you for moderating and putting all the questions out there. As we close, we're going to go through our normal process of the closing, and that is, I'll just quickly make an announcement to all of our participants on, we will have available a recording of this webinar. So if you want to go back and take a look or share it with your friends, we will be getting an email out tomorrow that will have a link to the recording of this webinar. It will be on our YouTube channel. And then in addition to that, there will be a link from the YouTube channel to any of the presentation material that was shared for the duration of this. So you'll have all of Steve Applebaum's contact info, and that will be a part of the link, if you will, to the PowerPoint, which will ultimately be on our Google Docs page. Don't worry about it. It's a lot of technical things that I just said. Take the email and click on the link, and you'll find everything there. So let's start closing down. Now I'm going to give each one of you, Steve, Denny, Terry, and Steve Applebaum, a chance to make some last comments. I'm going to start with you, Steve Denny. Any last comments that you want to make before we shut down?
Well, first and foremost, Steve, I'd like to thank you very much. Incredibly informative webinar. And we would like to strongly encourage our business owner community to get in contact with their insurance agent. And if they don't feel comfortable and they don't feel like they're getting good guidance, things like you mentioned, Steve, excellent materials about how to minimize their risk and maximize the coverage they get for the dollar that they're spending, then we strongly recommend they reach out to you and you connect them with the appropriate expert to help them move forward. But a lot of business owners are really thriving right now, and a lot of business owners are really struggling. If you're struggling, there's no time like the present to get engaged with your insurance company. Make sure that you are covered as best you can. And Steve, are there even programs where people potentially would have a deferment option in a time where they may be closed for a temporary period of time?
Absolutely, Steve. And we saw that quite a bit in the very early part of COVID. There was a lot of leniency given, even skipping payments and tacking them on at the end of the policy period, as long as the insured agreed to sort of stay with the same carrier, things like that. But we're about relationships and that. So yes, a lot of leniency given. Well,
excellent. Yeah, we just strongly recommend people don't get captured by fear and go into ostrich syndrome here and dip your head in the sand. Get out there and get in touch with your key trusted advisors, and your insurance agents should certainly be part of that group. So again, Steve, we're in your debt. Thank you very much for giving us the time today. Incredibly informative talk.
Okay, Steve Applebaum, I'm going to turn it over to you. Any summary thoughts that you want to share with our participants before we shut down?
I just want to say thank you. Thanks to the guys at Innovative. I really enjoy working with you, Terry, and it's great having the opportunity to maybe present insurance from a different standpoint. The only thing that I would suggest is you really need to have tough conversations about where is the risk in your business. Maybe go through a disaster recovery plan, and it can be, you could do it one from a property standpoint or two from even a technology standpoint. What would you do if you walked in tomorrow and your computers didn't come on? It's happening to somebody tomorrow, I guarantee you. And so, again, the idea of being prepped is great. And I would encourage you all that there's a lot of free advice out there. It just takes effort. It takes effort, and it takes relationships like all of us here to share with each other. So thank you very, very much for letting me be a part of this.
Great. Okay, Terry Lammers, you get the absolute last word.
All right, I got a couple things. So one, I forgot to mention in our CEO program, we do it individually and in small groups, and we're starting another small group of 5 to 10 people on August 19th. The first 12 sessions are monthly for 2 hours, and then it goes quarterly for 2 years. So we're starting another group on August 19th. If you're interested, please give me a call and we'll get you signed up. You know, Steve, from two things I was thinking about from a valuation point. Insurance is something that, you know, I know maybe you don't like to hear this, but I know you never raise your rates either, but it's typically, that's a big nut for a business. You know, I mean, I was paying over $100,000 a year, so it was always my favorite check of the year to write. So, but then also something to think about for you business owners out there is that it was also a very strategic. So when you talk about buying a company, you know, we do financial valuations, but then there's always strategic things to buying a company. And one of the big ones for me whenever I buy another company is the elimination of their insurance. Because, I mean, a lot of times you couldn't get rid of it totally, but, you know, I already had the liability coverages. Maybe there's a building that they're insuring that's going away. You know, maybe their trucks are going away and, you know, because we don't need them. So if you're buying a company and you're looking at ways to cut costs, oftentimes insurance is something that becomes a duplication and can save you a lot of money in a combined company. So something to think about. Acquisition is a great way to grow. So I even bug Stevie needs to keep buying other insurance companies. So thanks for being on, everybody. Next week, we'll definitely have another guest. I think it's going to be an attorney right now. So if you have any attorney questions, give me a shout, and have a great weekend, and we'll see you all next week.
Okay, great. Thanks, Terry. Bye-bye, everyone. We'll see you next Thursday.